Welcome back to Dinar Info News, your go-to channel for the latest updates, deep dives, and accurate insights on the Iraqi dinar, Middle Eastern economics, and global currency shifts. If you're new here, make sure to hit that subscribe button, turn on the notification bell, and join our fast-growing community of currency watchers, investors, and truth seekers. Every week, we break down the facts behind the headlines, strip away the hype, and bring you the clearest picture of what's happening in the world of the Iraqi dinar. Today's episode is nothing short of a bombshell. The Iraqi dinar has officially re-entered the Forex market, and the implications of this global shockwave are going to touch everyone from Baghdad to New York, from casual investors to institutional powerhouses. Stick with us to the very end, because what we're about to unpack could change the entire outlook on your dinar holdings and even your financial future. After years of speculation, rumors, and quiet reforms, the Central Bank of Iraq has made a historic move integrating the Iraqi dinar into the international foreign exchange Forex trading systems. This is no small event. For over 2 decades, the dinar has remained largely outside of open Forex trading due to sanctions, wars, political instability, and currency manipulation. While it was possible to exchange dinars in limited ways, often through unofficial or gray market dealers, it was never actively traded like the dollar, euro, or yen on major platforms. That has now changed. As of this week, several top global Forex platforms, including Bloomberg FXGeo, MetaTrader 5, and OANDA, have quietly added the Iraqi dinar to their live currency feeds. This move, although initially soft-launched, has already caused a ripple in currency markets and renewed intense debate about the future of the Iraqi economy. What makes this news even more significant is the way it unfolded. For months we've been tracking subtle moves by the Iraqi central bank, increasing gold reserves, tightening foreign currency auctions, boosting transparency in foreign reserves, and signing bilateral currency swap agreements with countries like the UAE and Turkey. All of these were clear indicators that Iraq was preparing to normalize its currency's role in the global system. Still, even the most optimistic analysts didn't expect a formal re-entry into Forex trading so soon. The announcement was made in a press conference in Baghdad, where Central Bank Governor Ali Al-Alak confirmed that Iraq had completed key technical compliance with the International Monetary Fund (IMF) and that the banking infrastructure was now fully integrated with global platforms for live real-time exchange. But let's pause for a moment and consider, what does this really mean for the average investor, especially those of you who have been holding on to Iraqi dinar notes for years, hoping for a revaluation or significant appreciation? For starters, the mere fact that the dinar is now openly traded on Forex platforms increases its liquidity and global legitimacy. Prior to this, you couldn't just go onto a trading app and swap dinars for dollars at real market rates. Now you can. That shift alone changes the landscape. It means the value of the dinar will no longer be solely dictated by internal auctions and black market rates. Instead, it will be subject to international supply and demand dynamics, a true sign of a floating or semi-managed currency system. And that means volatility, it means opportunity, and it means risk. So, let's talk about the initial reaction. Within 48 hours of being listed on major Forex networks, the dinar saw an uptick in volume. The price didn't skyrocket, but it did experience modest appreciation, about 2.5% against the USD in early trades. This may not sound like much, but in currency markets, a 2.5% move in 2 days is enormous. The biggest factor behind this bump wasn't speculative trading, it was institutional. Hedge funds, global banks, and currency ETFs were caught off guard. Suddenly, a previously illiquid, untradeable currency became an emerging market asset that triggered algorithmic trading models and demand from exotic currency desks. And where institutions go, retail investors usually follow. The dinar chat rooms, forums, and YouTube comments exploded with energy. Hope is in the air again, but it's vital to approach this moment with informed caution. A lot of people are now asking, is this the moment the dinar revalues? Are we finally going to see 1 dinar equal to $1, or even more? Let's be clear, there is no official revaluation announced. The currency is still pegged in some respects and partially managed by the central bank, currently trading around 1,310 dinars to $1 United States dollar. However, this Forex re-entry is a necessary prerequisite for any serious revaluation down the road. In other words, Iraq is laying the runway before takeoff. By entering the Forex markets, they are allowing international pricing mechanisms to begin evaluating the dinar organically. That is step 1 in building trust, volume, and pricing, history key ingredients for a stable, appreciating currency. Now let's explore the broader economic context. Why is Iraq doing this now? The answer lies in a combination of domestic and international pressures. Domestically, Iraq's economy is at a crossroads. Oil revenues are strong but volatile. The country has recently reduced its dependency on the dollar by increasing trade with neighboring countries using local currencies. At the same time, the Iraqi private sector is pushing hard for modernization. the rise of fintech companies in Baghdad, the government's new push for electronic payments, and the digital transformation of state banks all signal a desire for full economic normalization. Reintegrating the dinar into global markets is the natural next step. On the international side, Iraq is keen to regain its full sovereignty, not just militarily or politically, but economically. The long shadow of Chapter 7 sanctions and Treasury oversight has kept the country in a financial straitjacket. But in the past year, several key milestones have been achieved. The removal of Iraq from the FATF gray list, compliance with SWIFT standards, and deepening partnerships with the IMF and World Bank. These are not small wins. They've enabled Iraq to unlock international capital, attract foreign direct investment, and finally take its place at the Forex table. And what about the geopolitical dimension? Make no mistake, this move has implications far beyond Iraq's borders. Iran, which has heavily influenced Iraq's monetary policy, is watching carefully. So is the US, which maintains financial leverage over Iraq through dollar clearing mechanisms. China, too, is involved, quietly encouraging Iraq to de-dollarize and join a broader yuan-based trade bloc. With the dinar now live on Forex, all of these powers will have to recalibrate their strategies. We could see currency alliances shift, dollar dominance challenged, and regional trade restructured now. Here's the million-dollar question. Literally, should you buy more dinar now? Should you sell what you have, or should you wait? The answer depends on your goals, risk tolerance, and time horizon. If you bought dinar at inflated rates years ago, hoping for an overnight revaluation, this Forex reentry may not immediately make you rich, but it does increase the chances that the dinar could appreciate steadily over time. For new investors, this is a rare opportunity to enter a market in its infancy, when pricing is still inefficient and volatility offers potential upside. However, it's critical to do your homework. Don't just buy dinar because of hype. Study the fundamentals. Track the exchange rates, follow the CBI announcements and IMF reports. Knowledge is your greatest asset in this game. It's also worth mentioning that several major brokerages are now offering dinar-denominated instruments. This includes currency, futures, options, and even ETFs focused on Middle Eastern currencies. That's a whole new level of accessibility for the average investor. You no longer have to go through shadowy online dealers or questionable banknotes. The market is maturing, and that's a good thing. But as with any emerging market asset, the risks are real. Political instability, corruption, capital controls, and potential devaluation still hang in the balance. You need to be vigilant, diversified, and realistic. Let's take a look at what industry experts are saying. Former IMF advisor Dr. Nora Sela told CNBC Arabia that Iraq's move to rejoin Forex is one of the most significant financial events in the MENA region in the past decade, citing improved compliance with Basel III banking standards and transparent monetary policy as catalysts. Meanwhile, JP Morgan issued a client note warning that the dinar's liquidity is still shallow and subject to intervention. Translation: the dinar may be live on Forex, but it's not yet a free currency. The central bank retains significant control over supply, and market makers are still few and far between. But don't let that dampen the magnitude of what's happened here. For years, dinar holders have waited for any sign that Iraq was moving toward revaluation and reentry. This is that sign. It may not be the final destination, but it's a powerful waypoint. Iraq is signaling to the world that it wants to be part of the international financial community again. It wants its currency to be respected, traded, and eventually valued. That vision won't be achieved overnight. It will take time, reform, and global confidence. But this Forex reentry is a foundational milestone on that journey. As we wrap up this special report, let me leave you with a final thought. History is full of moments where overlooked assets became valuable when neglected currencies surged. When economies rebounded from ashes, the Iraqi dinar may still be under